Hey everybody, Jake here. Thanks for tuning in to another episode of the Cool Shit You Can Deduct show. Today I'm really excited because we're going to talk to Kevin, who is a business partner of mine, a friend. He's a CPA. He's been doing this stuff for, 20 plus years at this point?
Oh, you're my new best friend. 20 plus years, 30
That's on the low end,
years.
Right? Very, very intelligent guy. And, if you've listened to the show before, we're usually talking about, how to depreciate your yacht or, your luxury jet and stuff like that. But today we're going to talk about the ERC, the Employee Retention Credit, which we recently learned tax credits are sexy, right, Kevin?
We did. I know. We were in a meeting, and that's what we were in a meeting with some marketing people, and their feedback was, "Wow, tax credits are sexy."
I've never felt so good, like in my heart, about what we do for a living as right then. So
no, that's true. I agree.
No, so funny. Today we're going to talk about the ERC. So it's really crazy because the past few years have been absolutely insane with the COVID virus and the shutdowns and all those kinds of things. A lot of people are familiar with the government programs like the PPP, or the EIDL loans to the SBA. What we've noticed is a lot of people are not aware of the ERC, which, Kevin's going to go into it and he's kind of going to describe how it works. But, this thing is almost, I kind of think it's almost better than the PPP. It's almost like PPP on steroids, right, Kevin?
I would agree. So let's just jump right into numbers, right? We're both numbers guys. Let's right at the get-go.
Yes.
Everybody wants to, hey, how much money how much can I deduct? How much shit can I get?
The program? How much money am I getting?
How much free money can I get, right? So let me give you a real live example. So a client we're working with, they have say about 20 employees. Their PPP loan, their first PPP was $150,000, right? So nice, right? That's hey, free money that helps me out, right? To fund my business through the pandemic. So 150,000, they did not qualify for PPP2, right? But they did qualify for the employee retention credit. And Jake, are you sitting down? Are you sitting down, Jake?
No, I can't.
So they qualified just for 2 quarters, and we'll get into that obviously further down the road because we jumped right to the bottom line. Because as a CPA, I'm kind of a bottom line kind of guy, right? Their ERC combined for 2 quarters is pushing $500,000.
$500,000. So
it's about
they got 150.
I round it. I like to round. It's about $450,000. So PPP so 150, ERC $450,000 free money.
This is crazy. So tell us how it works. Break it down for us a little bit.
Oh boy! All right, here we go. Now we get into the details and get into the weeds, right? So we put that carrot out there, right? Yeah. It depends on how many employees you have, right? The more employees you have, the more money you could potentially get. But then it all boils down to, right? How do I qualify? So there's 3 ways to qualify. The first way is if you being the business, if the business was subject to a full or partial government shutdown, you automatically qualify during the period of the shutdown. So for instance, almost every restaurant in America was subject to a full or partial government shutdown, right?
They
automatically qualify, but they only qualify during the period of the shutdown. So like in Arizona, that's about a year. So, because I'm from Arizona, each state is different as far as the regulations go, but and there was, obviously there was, gyms, there was other businesses that were, affected by, state sanctioned government shutdown. So the first way that's the first thing that we look at is, were you subject to a full or partial government shutdown? You pretty much instantly qualify, right? Then number 2, the second more easy way to qualify is when Biden signed the American Rescue Plan back in May. He created a new provision of the ERC called the Recovery Startup Business. Again, I'll say that again, the Recovery Startup Business. So what they noticed was these poor people, these poor business owners, kudos to them. I don't know, Jake, I'm sure you've met them. People who started their business during the pandemic, right? What do
This
you
is
think?
a great time. This is a great idea. Time to start a business.
Right? But it's funny, right? I mean, they couldn't get PPP money, they couldn't get ERC money, so they were left out. They were left hanging. So thankfully, the federal government did something right for a change, right? They created this new provision called the Recovery Startup Business. So if you started your business on or after February 15th of 2020, why the 5th, who knows? But so February 15th, if you have employees, remember this all has to do with, if you have no employees, then none of this matters. But as long as you have employees, you started your business on or after February 15th, and your revenue is under $1 million, that's the caveat. Guess how much free money you can get, Jake? Free, $100,000. So that's the maximum. So it would be for third quarter. So technically, third quarter of 2021, you get up to $50,000, and fourth quarter of 2021 up to $50,000. So we've got clients that have 12 employees. Yeah, they're gonna get a check from the IRS for $100,000.
That's insane.
Tell me about it. I didn't make this shit up. And we can say that word, right? We can say that word all day on your show, right? I love this.
Say whatever you want, man. We're all friends here.
I can drop the F-bomb even?
You might be pushing it, but if it's appropriate, go with it,
Go with it? Okay.
Yeah. No one's getting canceled over here, so.
No, but all right. So again, number one, full or partial government shutdown, automatically qualified. Started your business after February of 2020 and have employees, automatically qualify. So then the third way, which is I would say more difficult, because involves a test, right? The first two ways you just sort of instantly qualify. So the third way is, did your cash receipts have a dip? Did they decline? So, and again, because we're dealing with the IRS and the SBA and the federal government, nothing's easy, right? So you have to look at every quarter for 2020, did your cash receipts decline compared to 2019? Did they decline by more than 50%? So that's a big hit. We've had maybe 10% of our clients qualify for that. But obviously, Jake, you're working with small business owners like I mean, it was brutal, right? It's been really, really difficult. Some businesses have taken off, some businesses have taken a hit. So that's the first, and that credit is up to $5,000 per employee. So then the third way is the cash receipts test. So you have to, of course, because it's the federal government, there's multiple provisions, multiple laws. But the first way to look at it would be 2020. So in any quarter in 2020 versus 2019, did you have a 50% reduction in cash receipts? Now, I know, we don't want to nerd out here too much, right? Cash basis versus accrual basis, right?
Because there's a difference,
There is a difference. So, right. And so it makes no difference how you file your tax return, makes no difference how you keep your books. This is on purely a cash basis. So on a cash basis, did you get a 50% reduction in cash receipts? Like I said, we have a couple hundred clients that we're working with on the ERC, and most of them don't qualify. And that's right. It's only a $5,000 credit per employee, or up to $5,000.
Wow.
So yeah. Well, and it gets better. Jake, are you sitting down?
I can if I need to.
So then I always say it's hard for a CPA to be funny. So I try. It's my attempt.
You're doing great, man. We're in the wrong biz. I'm telling you. You and I have way too much personality to be accountants. So
I know. Can we rename the show something else?
The name's staying, man. The name is good. All right.
Gotcha. So then the better provision of the ERC is the 2021 provision. So in 2021, compared to 2019, in any quarter, so first quarter of 21, first quarter of 19, second quarter of 21, second quarter of 19, was there a 20% reduction in cash receipts? So obviously way better. Not 50, it's now 20%. And that is the provision that this client I mentioned at the top of the show, how they got $450,000 effing $1,000.
That stands for free, right? Free in dollars.
And then what, Jake, this cracks me up, right? You must, the next, what's the next question, right? Do I have to pay taxes on this? And I'm like, dude, it's free money. You know, who cares, right? Yes, okay, so you have to pay taxes on it, right? But it's $450,000. So anyways, so where was I? I lost track. I get excited about money, about making money for clients, right?
No, I love it. I love how excited you get about it. You were on 20% reduction. So like the last way to qualify is from a 20% reduction in revenue from any quarter in 21 to any quarter in 19, right?
And actually, Jake, I was joking. I knew where I was. I was just, again, trying to, my attempt at accounting humor. But, so anyway, so that's it. And, you know, there's the, again, full or partial shutdown. Did you start your business after February of 2020, and then the cash receipts test? So then what needs to be done is then we need to look at, did that business owner get PPP money?
Okay.
So most businesses did get PPP-1, right? Or they should have. It was really funny. We were at down to the wire. Remember, the SBA shut off the program. I believe it was the end of May. I think it was May 31st, if I remember correctly. But I'm old. I don't remember everything anymore. You know, everything.
More than a year ago.
When I was young like you, Jake, I could remember everything. Now I can't remember everything. Most things, but not everything. So when the SBA shut down said, hey, you have 30 days. That's it. We're out of here. We still had dozens of clients still coming to us to get PPP-1 money. One.
Yeah.
That was like a year later. We got this one client at the last minute. We were holding our breath. We got this one client, it was $600,000 at the last hour. We were all holding our breaths. But anyway, so then you need to look at, and so not everybody qualified for PPP-2 because there was a similar requirement, right, Jake? Remember with the
you had to be down in revenue.
Down 25%. You had to be down 25% in order to qualify. And hey, as an aside, I mean, Jake, we're starting to see some fraud. So I knew this was coming. We've got a couple of clients that, and whether it was intentional or unintentional, we had one. They're gonna give the money back to the bank because they did not spend the money that they received. So, hey, I'm a licensed CPA. We do things by the book.
Yeah, there's definitely
we can deduct it, but we want to make sure we're deducting it correctly, right?
Legally and morally, 100%.
Exactly. So then you have to look at the term that is common out there is no double dipping. So what is meant by that is that for every dollar of wages that is paid to employees, you can only allocate that dollar of wages to either the PPP or the ERC, not both.
Got it.
So that gets really down into the weeds and so what we have to look at every employee, every payroll during the covered periods to make sure that we maximize those dollars of wages to maximize the ERC revenue.
That is awesome. And so, in a nutshell, there's more free money out there if you qualify. This one is a little more technical.
Very much more technical.
A lot more technical, right? But especially if you got PPP 1 or 2, you can still qualify. But we've got an entire team in place to make sure everything is done 100% the right way. In that money, you can get it if it's entitled to you, basically. So
correct. Yeah, I have a team of 20 people. That's all they do is they're working on the sales, marketing, accounting. Got a staff of CPAs that help with all of this.
So if you're interested, if you're a business owner and you want to see if you qualify, you're going to go to www.actionerc.com. It's our company, Action Accounting. So www.actionerc.com. There's a couple highlights on there that kind of highlights, at a high level what Kevin was talking about, some of the qualifications. And there's a button there to schedule a consultation with somebody on our team. And it doesn't cost anything to do that. So
I was you just took the words out of my mouth. That's my middle name. Free, cheap. Right. I love free, right? So yeah, it's absolutely free. There's no cost, no obligation. We were talking to, I don't know, most people don't even know where Yuma is, right? Yuma is in Arizona. It's in the middle of friggin' nowhere. It's probably one of the hottest spots in Arizona. And I was talking to somebody, they had one employee. It was a gym. He has one employee. He goes, "Will you work with?" I go, "Of course." I mean, you're a struggling business owner like the rest of us, right? If we can get you $5,000, $10,000, that'll change your world. That'll rock you. He's like, "Yeah, I could use 10,000." And I was like, "Sure, we'll definitely work with you." And then we work by referral too. So if we get you 10,000, you're going to be happy as you know what. and then you're going to tell your friends and your people that you know are fellow business owners. So no, we're happy to help wherever we possibly can. We all need to do this together to get through these trying times, right? That it's not competition. It's how can we collaborate? How can we help each other out? Oh my gosh.
Absolutely. And it feels good to be able to get these people these funds when it makes such a big difference, So that's great. Kevin, thank you so much. I know we could talk about this for probably another hour, 2 hours a week, if we wanted to, but that's really what we wanted to do was get it. What's that?
I'll take 30 seconds, I promise. So we were talking about how tax credits are sexy, right? So let me just throw out there's a few others. And brief, the R&D tax credit. R&D tax credit, 10% of what you spend, right? So I just met somebody last week. The guy's spending $100,000 a month on software costs, right? He's developing software. So 1.2 billion. I said to him, "How would you like a check from the IRS for 100,000?" He's like, "Oh yeah, sign me up," right?
Who wouldn't like that?
Yeah, R&D tax credit. We develop software here internally, so we qualify for it. So the R&D tax credit is out there as well, and then WOTC. Nobody's ever heard of WOTC. Work Opportunity Tax Credits. You hire people in certain categories: veterans, people coming off of state assistance, welfare, and felons of all things. Felons, right? Ex-cons. You can get a credit for each of those people in those categories from varying from $2,500 up to $9,500. So again, free money from the feds.
And I'm so glad you brought that up too. We could probably do entire episodes on each one of those in the future.
Okay, sign me up.
But this industry is the craziest in the world to me, and I'm sure there's others like it, but it's so deep and so complex. I've been doing this for years. Until we started working with you guys, we never specialized in this, any kind of credits. And a lot of other firms are the same way. The guy that you were saying who's spending $100,000 a month on developing software, like he's getting his taxes done somewhere, but his CPA, his EA is just not knowledgeable of it. So I'm so glad we're able to work together on this and bring that extra value to our clients. And so just to kind of recap, if you do want to see if you qualify, there's no cost or anything like that. We're not going to try to sell you a bunch of stuff, but just go to www.actionerc.com, fill that out, and we'll set up a consultation, and we'll go from there. So Kevin, this was great. I can't thank you enough for coming on. We'll do more of these in the future, and we'll cover some other cool shit that people can deduct. So. All right, great. Thanks for tuning in, everybody. We'll talk to you soon.
Thank you. Take care. Have a good day.